Good morning and welcome to another edition of Market Outsiders. My name is Namaan, joined by my co-host Jenny Rae. It is Wednesday, May 14th. It's around 9:17 a.m. Eastern. The market's open in 13 minutes, and we have a packed conversation for you today to get you out of here in time for the real start of your workday. I know you say it starts at 8 a.m., but we all know it starts really at 10 a.m., all you remote workers out there. So we'll get you out of here in time for your actual start of your workday. I'm in Phoenix, Arizona today. My colleague Jenny Rae's in Northern California. So we're watching the markets and some of this business news early in the morning for us, but we're really, really excited to dive in. Our agenda today is fourfold. Like I said, we've got a lot to cover. We're going to talk through the big news coming out of Microsoft yesterday. 3% of the workforce expects to lose their jobs here in the next few weeks. That's big news for one of the largest employers on the planet. We're going to talk about Nissan. They've mentioned that by 2027, they want to cut 20% of the global workforce. They're also going to consolidate their auto plants down from 17 to 10. And we want to talk about what that means, not just for the auto industry, but when we see a headline like that, kind of what we start to think about from a business owner's perspective. And then time permitting, we also want to circle back to a couple of stories we brought you last week. There's breaking news on the oil front. There's also breaking news on the art market front. We covered both of those markets at a very high level last week. And so let's follow up and see what's happening, after the conversations that we had last week. Jenny Rae, good morning. Anything you want to add to our agenda before we dive in?
Good morning. No, let's do it.
Let's do it. Okay.
Look, I mean, we could add to the agenda, but in 15 minutes, I think it's better that we just start slicing and dicing this morning. Come
Let's do
on.
it. Let's do it. So I'm going to go in order here that I mentioned at the very top. So I think the headline of today that we're paying attention to from an economic perspective is Microsoft. 3% of the tech company's workforce getting laid off. You can see this in the Wall Street Journal, Bloomberg, the AP, Reuters, right? Everyone's talking about this. And really, Jenny Rae, when I saw this, I had two immediate thoughts that weren't necessarily encapsulated in some of the reading that I did. So, thought number one was macroeconomic in nature, and it was this. This is another sign to me after yesterday's cooling inflation print that policymakers need to be paying more attention to the unemployment rate than they do inflation. That was my first thought. I was like, okay, maybe like the pendulum has swung in terms of what we should be concerned with. My second thought was a little bit more personal in nature, and it was this. It was how do I, as much as is in my control, how do I make sure that, I'm not affected by layoffs, if I'm working at a company like Microsoft, right? I try to put myself in the shoes of these people, and, this doesn't seem like it's performance related, it's business needs related. But when you read between the lines, one of the things that Microsoft's saying here is that we have too many management layers. And I had a couple of takeaways that I was just looking to apply to my own career and thinking about people that I know in this space and in this industry and kind of what I would tell them moving forward. And takeaway number one was this. If you are a middle manager at a tech company, you cannot get by without technical skills anymore. Like I know a lot of people who have been like kind of in this layer of management in big tech who have gotten away, with being there for a long time due to their people management skills or due to other ability. And it seems like more and more what these companies prize are the unicorns who can manage people and also manage technical processes. So that was kind of takeaway number one for me, reading between the lines in Microsoft's announcement. Takeaway number two, I think applies to people outside of tech as well. And it was this. It was like, if I cannot, as a leader or a manager, tie what I'm doing to either top line growth or bottom line savings, then I am at greater risk of, being made redundant. And at minimum, right, even if I keep my job, what I'm doing is I'm kneecapping my influence. And so as I was having a conversation yesterday with a friend of mine, we were talking about this, and we were talking about how Microsoft might have made the decision of who gets let go and who doesn't. And
That's what I want to talk about, Naman. What are the
right,
scenarios? But
right.
not just that, but I even want to go one level higher, which is like, why do you decide to lay people off? What are the
Hmm.
reasons? Because I think like when I teach on campuses, I teach a market share module, and I ask everybody the question, what makes your market share go down? And they immediately assume it's declining revenues. And there are actually six scenarios in which market share could go down. So I think we should talk about that too. But you finish first.
Well, let's get into it. I think how does Microsoft decide who gets laid off? A part of it
Yeah,
is
yeah, yeah. Go
a
ahead.
part of it is which business unit people belong to. A part of it is right your compensation relative to the market. There's a lot of people who entered Microsoft in 2021 and 2022. They had all the leverage in the world. They're probably getting paid more than what the market would pay them today. So when I look at who I'm paying and I look at who I'm paying relative to what the market rates are now, that's a determination for who gets let go and who doesn't. There are four or five other things that I would look at, but I'll let you jump in and share as well from your perspective what you think Microsoft was thinking.
Yeah. Well, when I read the news, that was my first question because going beyond the headlines, becoming a outsider is all about not taking what somebody spoon feeds you, but understanding where the business acumen actually comes from. And somebody actually asked me yesterday, "How do you build a business acumen?" And I said, "Question headlines. Do exactly what we do here on the pod." And so when I saw this Microsoft slashing thousands of workers, I think the normal thing that people think of, and the Wall Street Journal, I think, would have gone straight to this if this was the case, is if demand is slackening, right? If you expect that your top line will not be able to sustain either growth, which is one piece of your top line, or probably more importantly and critically, revenue, right? Like if your actual dollars in the door are not going to be able to be sustained, then you don't need the workforce that you thought you did.
Which is not happening
Uh,
at Microsoft.
which is not happening at Microsoft. And so I think that's why this news surprised the markets. I think it's important for you to understand that, right? If you think that they have weakening demand for their products and services, and actually 2 or 3 weeks ago we spoke specifically about Microsoft did not see weakening demand when they released earnings. So that was pretty interesting. So then you kind of look to the other side of the equation, right? Well, if you don't feel like you need to boost demand, if you feel like your growth is on track, then there's only one other reason on the revenue side that you would kind of cut jobs, and that's because you believe that your growth projections are not going to be what you thought they were going to be, right? You're not going to be able to grow at the pace that you thought. So you're on pace to grow, you're on pace to hit revenue targets, but you're not on pace to grow at the rates that you thought you were going to. But this to me looks like the other side of the equation, which is a cost issue, right? And you've already mentioned a few of those inputs. One of the costs is number of people, and the other main cost is salaries. Microsoft is a fixed cost business. They have very few variable costs. Every time you buy Microsoft products, that same exact tech stack and development stack and support stack was all purchased by other people in your company and the company next door. And so as a fixed cost business, they have very few variable costs. And so the workers, the staff members, are the two main inputs, right? They're both the number of them and then the price at which they're paid. Um, so to me, then Microsoft believes that to sustain the growth that they have, they can do it without these folks. So, like I said, if you don't have growth targets revising downwards, you're going to see efficiency gains. And so, I just wondered if you can double click a little bit into that. Is
Yeah.
AI from Microsoft and AI for Microsoft actually, doing the job that they were looking to do to get some of the bottom line gains that the market was looking for?
I think that's part of the story, but I think the other easy way out is just to blame AI and say, well, Copilot's taking everybody's jobs. And so I think
Yeah.
there's right.
I'm not recommending we do anything
Yeah.
easy. So what do you
Yeah.
think?
Yeah. So
Mhm.
I think that AI is a part of the story, but I think this goes back to a metric that I mentioned a few episodes ago, which is the North Star metric, I think, for every, publicly traded company CEO over the next 12 to 24 months is going to be revenue per employee. And I think Microsoft saw an opportunity to cut expenses without affecting its revenue forecast. As a business, rationally, why would you not do that? And this is one of the benefits of being a platform business, which I would call Microsoft a platform business. You don't need to grow headcount in step with your revenue. There are
You shouldn't,
economies
in
you
fact.
shouldn't. There are economies of scale that should be unlocked if you're running the business well, which by all accounts it looks like Microsoft is running the business really well. And I think this is another sign that in the froth of the post-pandemic economy, a lot of these large tech companies overhired. And now what you're seeing is a comeback to reality, which says, hey, we can continue to grow revenue, we can continue to beat the street's expectations, and actually we need less people than we thought to deliver it, partly because of the efficiencies that AI has unlocked, partly just because of consolidation that's happening post M&A. Microsoft acquired Activision Blizzard. And so now when you have your own internal Xbox video game team and you have an Activision team, you don't, there's redundancy there. And so there's a lot of factors for why Microsoft's doing this. But I think
Gasp. Are you
ultimately,
actually saying that they may recognize the synergies that they put on paper, Naman? I can't believe it.
I don't know, the consultants who advise on the deal might need a raise or something because this actually might be panning out. Yeah. But
Exactly.
yeah, but this was always part of the plan. Otherwise, you don't move forward with the acquisition.
Well, Naman, if it's okay with you, I'll pull up my screen now and we can
Mhm.
talk a little bit about the other news that I think big in the news that again could be misinterpreted as macroeconomic. And I think that's the challenge in a interesting macroeconomic time is that you could easily just kind of attribute everything to tariffs, right? Microsoft tariffs. It's all tariffs. And so without going knee jerk on it, I want to just highlight Nissan. Are you good with that? Can I bring that news up for us now?
Let's do it.
Okay. So this news broke on Monday, but is developing as we're kind of understanding a little bit more about what's happening in the market. And I really like this kind of summary from Reuters. So that's why I brought it up. It says Nissan cuts plants and workers as new CEO Espinosa takes axe to cost, right? So that's kind of our overall headline here. I love it because it's clear. It's immediately evident why we're taking an axe to cost. Nobody takes an axe to costs if you feel like demand is up and to the right, right? So I just want to start with the fact that anytime you have cost cutting, it is a secondary measure. Revenue is always the first thought for organizations
Especially
because
in this kind of business.
especially in this kind of business because when you take an axe to cost you're actually cutting out you're cutting off one ankle, right? Because you reduce your ability to produce in the future if demand increases. So I think this is really important news about the auto sector and really valuable. It doesn't, by the way, mean it's the wrong decision. It means, in fact, in many situations, it is absolutely the right decision, but it just means it's usually a secondary decision. The first decision is how many more cars can we sell and at what price? And if we can't sell them at the price that we thought we could, and if we can't sell as many as we thought we could, then we have to take really drastic measures like this. So I love this Reuters summary. You get kind of AI summary. I feel like this was a non-AI generated summary because it actually ties to the metrics and the details specifically that are called out, right? So Nissan is to close 7 plants, reducing their production sites to 10. It's possible that they never needed 17, but it's also possible that they're consolidating only. It's more than likely that they're actually cutting their production, capacity total. Um, they're certainly cutting their production speed. They're kind of like rapid, growth to market. And then Espinosa highlights rising variable and fixed costs as major challenges. If you're trying to develop business acumen, if you're thinking about how you want to understand the markets, this to me is where you double click. Which one is it? Right? Rising variable and fixed costs. Because those markets were those plants were largely fixed costs to set up, but they're run by people who are largely variable costs. Variable costs, I think, though, here is what they're talking about inputs. Here's what is
It's
interesting, though.
it's the raw materials.
It's the raw materials, but like the real question to me is, in an age of rising raw materials, are cars not an essential item? And if they are an essential item, then Nissan's not well positioned, right? You kind of look through the cascading effect of what this might mean, and it's important for what the brand and the top line actually will kind of incorporate. And then there's like something that I just love about Reuters and especially some of these articles, right? It says Nissan, which held off on releasing estimates for the financial year just starting, saw its profit almost wiped out, and the one just ended. Like that's not a good way to start, right? So operating profit totaled 70 billion yen. Sometimes you see these headlines because there is no other rational course of action for a CEO. Naman, you want to talk a little bit about the leadership implications of the news that Reuters came out of and what might have led to some of these decisions?
Yeah. Well, I think The first thing that I'll just say when I saw this news, Jenny Rae, the first thing that I thought of is Nissan is prioritizing rationality over innovation. Because what I know about the automotive industry is when you reduce production capacity, you also potentially reduce the diversity of your production. So when you're moving from 17 plants to 10, what you're most likely have to do is you're going to have to build more cars on the same chassis, which means that they're all going to have the same base and the same foundation. And so, to your point about are cars an essential item of the future? They might be, but I think what Nissan is saying is our position in the market positions us more as like a kind of affordable friendly brand, which means that our core consumer isn't going to care as much about kind of innovation in terms of like the body style of a particular car. We're going to have to innovate it,
They're not willing to pay for that
and they're not
innovation,
willing to pay
even if
for
they
it.
care about it, right?
Even if
Yeah,
they care about it,
exactly.
they're not willing to pay for it. That's not our core consumer. That's not our positioning in the market. We're going to have to innovate in other ways. Maybe that's innovating inside of the cabin. That's innovating, in terms of the infotainment system. That's innovating in terms of the suspension, right? But in terms of the body style, the chassis, what I see, what I see when I see this news is, oh, okay, Nissan is prioritizing practicality, and in an environment where your raw materials costs are rising, in an environment where, trade barriers might be coming up, in an environment where you're losing money right now, I think it's the right call to make to streamline, to simplify, and to say we're gonna spend less money producing quality cars. Let's try and gain back market share, and then we can think about innovation right, in the next business cycle. So I think that's what's happening here at Nissan. And in terms of messaging, Jenny Rae, I think if you're a new CEO, two things. Number one, you have a honeymoon period. And so Espinosa here has a honeymoon period with the board. He has a honeymoon period with the shareholders. He has a honeymoon period with customers. And so if you're going to come in and make tough decisions, you want to do it as early as possible while you have the grace from all your different stakeholder groups. And then second, the first move that you make as CEO is a signal for what your tenure is going to look like. And so I think what he's coming in and messaging is saying, look, we're bringing a new era of discipline to the company. He's messaging that to employees. He's messaging that to shareholders. He's saying, look, these are the metrics that I'm going to manage to. These are the metrics that matter to me. And I'm not just saying it, you're going to see it in the first major decision that I make. And this is going to set the tone for the rest of my tenure. So I think this is all very intentional in terms of the signaling that Espinosa is putting forth.
Absolutely. Last, yeah, right, and you can actually see that here, right? New CEO is aiming for total cost savings of about 500 billion yen, but he faces the difficult job of turning around an automaker that has seen its brand value eroded. That sector of the market is incredibly challenging to compete in because you're competing on price in a rising cost environment. I mean, that's the most challenging place that you
I
could
mean,
be
I would say that like budget to intermediate segment of the automotive market, I mean, it's commoditized at this point. I don't feel any brand loyalty, to brands that play in that part of the space. It is just, and I think a lot of other consumers in that segment, we buy on price and then features and everything else a second.
So, that being said, Naman, anything that you want to tie up for folks today before we let them go? Markets are open. It's time to wrap up the conversation, if you can believe it. Although, just a quick hint, next week, for those of you that are listening live, we are going to do a full live 1 hour episode of Market Outsiders. So, we'd love to hear your questions before that. What are some of the things that you want us to double click on? Looking forward to having an open conversation with you. We're going to invite you into the Zoom. So it's going to be really fun to have you on then. You'll get an invite for that both on this channel and also by email if you're subscribed. Naman, anything you want to say to wrap up and tie up some of the fun other news that we've been covering over the last few weeks?
At the risk of sounding robotic, I do have three key takeaways from our conversation. So I'm just going to
What
run
are you,
through
a
them.
consultant or something, Naman?
So three key takeaways to tie this up. Number one, you don't necessarily have to grow headcount to grow revenue. I think that's business myth busting 101.
And if
Uh,
you can't, don't, right?
and if you
Yeah,
can't, don't. Yeah,
yeah.
yeah. Number two, it really it really matters. Practicality really matters. And so you can have everything that you want as a business. You often can't have it all at once. And so I think that's what Nissan's realizing right now is that an order of operations matters in terms of, getting back to profitability, getting back to a brand positioning that you want. And then number three, on a more personal and career-based level, be able to clearly communicate how your work impacts either the top line or the bottom line of your company, because you should always be ready to rationalize the contributions you're making, rationalize the contributions that your team's making. And I'll just tell you, as a decision maker inside of an organization, it's really hard for me to let go of people who either make me money or save me money. And so be thinking about, you know, how your work ties into the metrics that your leadership cares about, even if they're not necessarily the metrics that you always care about. That would be my personal and career takeaway from our conversation today.
I love it. Well, we'll see you back here tomorrow.